the digital dinar, and the future of Iraq's economy. Welcome back to IQD to VND. A big thank you to all our subscribers. Our community has grown to 260 strong, and we appreciate every one of you. Today, we're diving into a topic that could have a major impact on Iraq's economy: the introduction of the digital dinar. This development is unfolding much faster than anticipated, and it has the potential to reshape Iraq's banking and financial systems in unprecedented ways. Alongside this, we'll explore an important economic strategy that has been implemented by multiple countries in the past: dropping zeros from the currency. This concept might sound like a simple numerical change, but it carries significant economic implications. We'll break down what it means, why countries do it, and how it affects everyday transactions, inflation, and market stability. The digital dinar, a new era for Iraq. The Central Bank of Iraq, CBI, recently announced that the digital version of the dinar is being launched sooner than expected. This move was initially not part of the CBI's short-term plans, but several factors have accelerated its introduction. The International Monetary Fund, IMF, and the U.S. Treasury Department have been pressuring Iraq to strengthen financial regulations, particularly to prevent the illegal flow of U.S. dollars into Iran. As a result, Iraq is embracing digital currency solutions faster than anticipated. Why is Iraq moving to a digital currency? The transition to a digital dinar is not just about modernization. It has strategic economic goals. 1. Enhancing financial transparency. Digital currencies make it easier to track transactions, reducing corruption and money laundering risks. 2. Strengthening monetary policy control. The CBI can more effectively regulate money supply and interest rates. 3. Reducing dependency on physical cash. Iraq remains a largely cash-based economy, but a digital currency can simplify transactions and improve security. 4. Encouraging foreign investment. Investors are more likely to engage with economies that have modern, transparent financial systems. This move aligns Iraq with global financial trends, where many countries are exploring or implementing central bank digital currencies, CBDCs. The concept of dropping zeros from currency. Many people are curious about what it means when a country decides to drop zeros from its currency. At first glance, it might seem like a simple adjustment, but it has deep economic implications. What does dropping zeros mean? When a country removes zeros from its currency, it is typically done in response to inflation. Inflation occurs when the general price level of goods and services rises, causing the purchasing power of money to decline. Dropping zeros is a way to simplify the currency system and make transactions easier. For example, if a currency's value declines significantly due to inflation, prices can become excessively high. A government might decide to remove 3 zeros from the currency, meaning that 1,000 units of currency become just 1 unit. However, this does not impact actual purchasing power. Why do countries drop zeros? Several reasons drive this decision. 1. Combating hyperinflation. Countries experiencing extreme inflation need a way to regain control over their monetary system. 2. Simplifying transactions. When prices rise too high, everyday transactions become cumbersome. A more straightforward currency system makes business and personal finance management easier. 3. Restoring public confidence. A restructured currency can help rebuild trust in a nation's financial system. 4. Encouraging foreign investment. A more stable-looking currency is attractive to international investors and trade partners. Countries like Turkey, Zimbabwe, Argentina, and Brazil have all implemented this strategy at various points in history. Does dropping zeros impact inflation? One common misconception is that dropping zeros automatically lowers inflation. However, this is not necessarily true. The success of this strategy depends on how well a government manages monetary policies and economic reforms. If underlying inflationary pressures are not addressed, the problem can persist even after a currency change. For Iraq, dropping zeros could be part of a broader strategy to stabilize the economy, especially as it moves toward digital currency integration. If managed well, it could attract foreign investments and improve market confidence. How does this relate to Iraq's economic future? Iraq's decision to modernize its currency system and banking infrastructure suggests a long-term vision for stability and growth. Here's why this matters. Boosting investor confidence. Investors prefer stable economies with predictable currency policies. Controlling inflation. Properly managed monetary strategies can keep inflation under control. Enhancing trade relations. A stable currency makes it easier for international businesses to engage with Iraq. Are banks preparing for major economic changes? In recent months, banks have been adjusting their strategies in response to anticipated economic shifts. Several key trends are emerging. 1. Increased wealth management services. Banks are opening offices dedicated to managing high-value assets. 2. Investment in digital currencies and blockchain. Institutions are positioning themselves to take advantage of future financial technologies. 3. Shifts in banking regulations. Changes in financial regulations suggest that banks are preparing for new policies and valuation adjustments. What could this mean? Some analysts believe that banks are preparing for a currency revaluation. A revaluation occurs when a country reassesses the value of its currency, potentially increasing its exchange rate relative to other currencies. This is different from dropping zeros. Instead of a superficial change, a revaluation can increase the currency's real purchasing power. The role of cryptocurrencies. In this shift, banks and governments worldwide are recognizing the growing importance of cryptocurrencies and blockchain technology. By investing in these technologies, financial institutions are not just hedging against risks. They are preparing for a future where digital assets play a significant role. Iraq's move toward a digital dinar is part of this larger trend. By integrating blockchain-based currency solutions, the country can improve transaction security, financial inclusion, and global trade efficiency. Conclusion: a new chapter for Iraq's economy. Change is coming to Iraq's financial system, and it is arriving faster than most expected. Whether it's the launch of the digital dinar, discussions about dropping zeros, or banks preparing for economic shifts, one thing is clear: Iraq is positioning itself for a more modern and stable financial future. As always, the success of these changes depends on government policies, market reactions, and global economic conditions. If Iraq's leadership manages these transitions effectively, the country could become a significant player in the global financial landscape. Your thoughts? What do you think about Iraq's shift toward a digital dinar? Do you believe dropping zeros from a currency helps stabilize an economy? And how do you see banks preparing for future financial shifts? Let us know in the comments. Thank you for watching and supporting our channel. If you found this content valuable, please like, share, and subscribe for more updates. Stay informed and take care.